Today, Bitcoin briefly tumbles to a two-year low. FTX reveals it only has $1.2 billion in cash to cover billions in debt. And Pat LaVecchia, the CEO of Oasis Pro Markets, breaks down what's next for crypto regulation. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices rose this morning, even as investors worry that the FTX collapse could drive contagion across the industry. Bitcoin bounced higher after briefly hitting a two-year low. As of noon Eastern, Bitcoin was trading above $16,000 after falling to around $15,500 earlier in the day. Ether, meanwhile, rose to $1,100 and XRP climbed to 37 cents. The cryptocurrency market has lost more than $1.4 trillion in value this year as failed projects and bankruptcies plague the industry. Okay, let's talk about the top stories first. Hackers who stole hundreds of millions of dollars worth of crypto from FTX have started to launder the funds into Bitcoin. You might remember, after FTX filed for bankruptcy, the new CEO, John Ray, said that unauthorized access to certain assets has occurred. Blockchain analytics firm Elliptic estimates that around $477 million worth of crypto was stolen from the collapsed exchange and converted into different digital coins, with most of it changed into Ether. The co-founder of Elliptic told CNBC that the hackers were using a common tactic, converting the Ether into a crypto product called RenBTC, which is then being converted into Bitcoin via a bridge, bypassing centralized exchanges in the process. Next, FTX attorneys said in a hearing today that the collapsed exchange continues to suffer cyber attacks and that substantial assets are missing. According to Reuters, a court filing revealed that FTX has a total cash balance of $1.24 billion, which a consultancy firm advising FTX noted is, quote, substantially higher than previously thought. Over the weekend, the company said it has launched a strategic review of its global assets and is getting ready for the sale or reorganization of some businesses. The exchange and its affiliates filed for bankruptcy in Delaware earlier this month, leaving an estimated 1 million customers and other investors facing total losses in the billions of dollars. Finally, as crypto markets weather the implosion of FTX, 4 Democratic senators have urged federal regulators to look into SoFi's crypto trading activity. In a letter on Monday, the lawmakers, who include Jack Reed of Rhode Island and Senate Banking Chair Sherrod Brown, warned that its, quote, digital asset activities pose significant risks to both individual investors and safety and soundness. The lawmakers expressed deep concern about the lack of regulation in crypto markets in 2 separate letters, one to federal regulators, the other to CEO of SoFi, Anthony Noto. SoFi is unique among institutions because it's both a bank holding company and a crypto exchange through a subsidiary. A SoFi spokesperson said that the company takes its regulatory and compliance commitments seriously, including their non-bank operations within the digital asset space. The statement went on to say, quote, we believe we have been fully compliant with the mandates of our bank license and all applicable laws. All right, on to our main story. As the digital asset market continues to take a bruising following the collapse of major exchange FTX, Crypto World's Jordan Smith spoke with Pat LaVecchia, the CEO of Oasis Pro Markets, on the impact of the fallout and what's next for regulation.
So looking at the fallout from FTX and some of the lessons learned there, what sorts of regulations or guidelines for the industry look most urgent in your opinion?
So I've always been a believer that regulation was required in this space. The current approach with regulation by enforcement has been choppy. It started with an action against Ripple before Chairman Gensler came in. That's a big entity, right? Ripple is very prevalent, and that's ongoing because of lawsuits, et cetera. That's going through its paces right now. But most recently, it's been really small companies that have been paying fines or shut down by the regulators rather than the big players, and that is that's been concerning because Chairman Gensler came out over the last 2 years and has stated on more than one occasion, has also written op-eds regarding the fact that he needed legislation in order to go after the crypto market because of the uncertainty. But I firmly believe that, unfortunately, the legislation won't catch up for a couple of more years, at least here in the U.S. MiCA is coming through in Europe at the end of Q1, so they will have some types of regulations in place. in the EU. But here in the U.S., we're going to be further behind there. So, we expect more regulation by enforcement. But what really would help the industry, and we can talk more about this, what really will help the industry is if they're going down that path, you really have to work, you really have to cite the large players. Now, I'm not beating the drum that, all the large players need to be regulated necessarily in the token world, but that'll send a message and move more toward regulation. Whereas to date, it's been a bit fuzzy.
We spoke to Senator Ted Cruz last week, and he told us that Congress needs to be careful not to overregulate, and that lawmakers need to be educated on what crypto is or what different areas of the industry need the most guidance. Do you agree with his view that maybe there's a risk of overregulation or the wrong regulation? And since you say that it could take a while to see regulation here in the US, is this a time for the industry or for experts to come in and educate lawmakers on what the differences are in crypto?
The education has been happening over the last 4 years. There's a whole cottage industry of lobbyists and advisors and consultants, lawyers that have been educating the legislatures. So that's been ongoing for a long time. We've been part of that process as well. I would agree with Senator Cruz in regards to overregulation is not a good thing because it, at the end of the day, it stifles innovation. Overregulation does. So we don't want that. But we do have a set of laws and regulations in place that go back to 33, 34. The downside is they really don't take advantage of the blockchain. The blockchain allows for perfect data. It allows for lower costs for transactions, increased safety, zero counterparty risks, and faster payment. I mean, there are all these great benefits of the blockchain. It's like a Ferrari, but with the uncertainty coming from the regulators, it's like a Ferrari on training wheels. So I've used that comment before, but I think that shows you, if you can picture it, exactly what the downside is in regards to the current approach. So I would agree with him, but I think there are a set of regulations in place that if they're implemented in regards to many of these tokens, then there's a process over the next several years where they're improved upon.
Some in the industry have said that, okay, maybe we can self-regulate or maybe we can have some sort of guidance on our own that will help restore trust in some of these big players. Is that the right way to go about it in the meantime? Is there enough trust for the industry to be able to manage something like that? And how effective could that be?
As an example, FINRA is a self-regulatory organization. And we're regulated by FINRA, and they're overseen by the SEC, and we're also regulated by the SEC. So SROs, self-regulatory organizations, do work. I'm not quite sure that'll work initially in the blockchain crypto world. FTX was actually leading the charge on taking an SRO approach. Obviously now that approach has been tainted by what's occurred with FTX. They were leading a lot of this. You can't regulate against fraud. Fraud happens, but it's a black eye. And this black eye is going to hang with us, unfortunately, in my opinion, for the next 12 to 18 months. And, we're in a crypto winter for some. I've been saying it's a crypto ice age for at least 12 months. That's been extended because of what's occurred with FTX and this contagion that's going to continue. We're going to see, a lot of us are seeing the news every week, every day, every minute. It keeps changing. More, unfortunately, funds and companies are going to fail, and that's going to continue this negative news cycle for some time. But I do think we're in this unfortunate crypto ice age for the next, or crypto freeze. I mean, there's so many comments out there over the next 12 to 18 months. So during that period, I think having an SRO in place or actually spending a lot of time on it is unfortunately not going to lead to the desired outcomes.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.